Hello, hello. Welcome everyone watching this. So today we're gonna analyze a deal that I have. Somebody sent it to me. So uh, the goal is to show how we do the analysis and how we understand a deal. And then also understanding the underwriting part of it. But I think first is like when you start investing in commercial real estate, so people will send you the OM, right? So how do you read it? Um how do you like analyze the opportunity that they put in front of you? So that's the important part that um that we want to do it right now because oh, hi Sasha. Yeah, hear me okay? You hear me?
Hey, Sophie.
Awesome. Okay, here we are. Um,
And now I can hear
so
you, but the picture is you're frozen. So I'm gonna turn off my video. Maybe you can turn it off.
okay, I'm gonna
This
share
connection
my screen.
unstable.
Yeah, connection is not that great, huh? Um, well, a lot of people, that's why a lot of people in our office, that's why I guess try to share my screen here. So this is I'm gonna turn off my video, okay? And this is the deal that on our table right now, right? That need investment and we're looking at this deal as a 94 units. This deal coming from my friend and it's a hotel conversions and multifamily. So if you see if you um if you see this, what do you like what do you think, Sash? Are you there? Okay. So this is the opportunity overview. So the this is the
Okay, finally
pool,
see
right?
the front.
Oh, finally you see it? Okay.
Yeah,
Cool,
finally see the
cool.
front page of this deck.
Mhm. Hi, Bob. How you doing? Thank you for joining us. You hear me okay, Bob? Oh, you're on
Sorry,
mute.
I had mine on mute. So I'm sorry I'm not late, but thank you for allowing me this opportunity to join.
Yeah, thank you. We're analyzing a deal today.
Okay,
Would you like to join us?
absolutely.
Yeah. So, but first, like, let's get to know each other. So this is so I'm Sophie, been in real estate for 6, 7 years now, and been investing in apartments since 2022.
Okay.
And that's my background so far. Yeah,
My wife and I have been involved with real estate since 2016, single families, and we dove into multifamily as LPs beginning in 2019.
that's amazing. That's like you're way more experienced than me. Yeah, would love to get your opinions on this deal as well.
Okay.
So, and another person on the call is Sasha. Sasha, would you like to introduce yourself?
Yes, let's see if this works. Really bad Wi-Fi here, but nice to meet you, Bob. Yeah, I'm in tech, also in real estate. Know Sophie really well. Live in Dallas and spent 15 years in New York, 3 years in Austin. Yeah,
Okay.
so a little bit about me.
Yeah.
Where are you
And
calling from, Bob?
I'm calling from New Mexico, Rio Rancho, New Mexico, which is right next to Albuquerque.
That's a beautiful area. Yeah.
Yes, it is. I didn't appreciate it when I first moved here, but it's been home for over 22 years now for us.
That's amazing. 22 years. Yeah, that's amazing. So, um, so this deal is in Arizona. So it's in Scottsdale, and it's in the area called Fountain Hills, where a lot of people go vacation, I guess. Um, but I think they built it in two, 2005, this hotel, and the team is acquiring it to convert it back into multi-family. So this is the property picture that we can see, right? And they have a pool. Oh, I like this lawn, like this view. And this is the team. So my friend Roy brought this deal to us, and Roy was operating his own property management company for 16 years before, and then obviously a construction company as well. And now he's like going to syndicating for the past few years. So he's acquiring this, and it's 94 unit, built in 2005. The average size a little bit small, right? It's like 531 square feet. So I guess this was a hotel room, and now they're converting it
Uh-huh.
to like a unit, and 3-story with a lot of parking space. Yeah, that's nice. So the average market rent, they say, for one bed, one bath is 1875. So they already have 35% converted. So now they just finish up it, I guess. And let's see. So why we love this deal? So it's a class B plus asset, but in a class A location. Yeah, because the hotel, and I think it's near to the fountain. So, and they appraised this property at 27 million. So the new owner will have more than 7.5 million in equity from day one. 50% bonus cost seg in year one. That's like really good, right? Like
Yes.
have 7.5 million in equity from day one, because it's appraised at 27. Let's see how much they buying it for. Okay, so it's a nice clean property. It's not new built, but I guess the condition is great because it's a hotel. You maintain it every day. So they have the rent comparable here. Fountain Park. Okay, so they average this into 1775, and the 2-bedroom is 3250. Wow, this is interesting.
It's an interesting contrast based on when looking at the average monthly rent and looking at the years each of these buildings were built. This is a pretty wide range.
Yeah, and I think the oldest one is 97, right?
Right.
And it's smaller. The size is smaller, just like Fountain Park. Excuse me, just like this one. So the rent, I would put it lower, right? I would put it lower. I would, I would just put it like 15, 1575 even, or just in case. So this one is like 1587 here, right? I would put it around here. I can see why they do this, but these are bigger units, so and I don't know what are the condition that they compare to, but they are bigger units, and this is also too much. I think like 2 bedroom, 3250, kind of too much. But I don't know, maybe it's their market like that. But if they can rent somewhere for 2000 and it's like 2018 built and it's a thousand like average bigger, then I think they would go there instead, right? So I would put it closer to the 2000. That's what I think I would do differently. But the sales comparable here. So they are purchasing it for around average 12 million. I think the like 12 million at the price of 200. So this is the area of price is 270 per unit with the
I mean,
exit
this looks
cap.
like it's the comparables. It doesn't, I don't,
It's not this price, yeah.
yeah, it's not their sale, what they're gonna purchase it for, yeah, or,
Mm-hmm. Yeah. The exit cap rate, I think, is also very, very low. Right now, I think cap rate already like increased, right? And this is price per unit of this property around it. So wow, it's quite high in this area. So it's like 300 something plus, 300 something plus, but these are like newer, even 77 vintage, they still sell for 330K per unit. Interesting.
oh, no. Ratings. Even comes in with a low rating too.
Yeah, this is a low rating, so it's you sell it low, maybe like classy apartments. This is also kind of like lower. Interesting. Vacancy 0. Vacancy is 100% and vacancy is 0. That's interesting. Vacancy also 0 here. I think this new build, and that's how they trade for. Like after build, they sell them right away. And this is kind of like a almost distress deal. This is old data, I guess. And then, oh, okay. The purchase price is here. It's 12.5 million. So they bought at 12.5 million. It's like a little more than 125K a unit, right? Because 94 units.
Correct.
Yeah. Property tax is 25,000. They're gonna get a first loan, 10 million, and then they get second loan of 2 million. And this is the amount that they're looking for. Capital contribution of Class A member. So they're raising around 3 million to make it totally like a 15 million deal. Interesting. Okay. Title, insurance, property tax, total use of fund. Okay. I don't see where do they have the money to repair it, right? The money to convert. You see it somewhere?
No, I don't.
This is just for closing on it, right?
Capital contributions means 14.
What is FF&E? I forgot what it is.
I don't honestly know. Let me check real quick.
Yeah, we can check it.
Wait, gee, okay. The
Yeah, let's check it. What?
fixtures, furniture, and equipment.
Okay, okay. Okay.
So this is my question about this. It should be, so if you're asking, you're putting forth loan and capital contributions for members and all that. I'm just trying to anticipate, like you said, the main, the CapEx, how are they gonna do that? And that, you're gonna be asking your LPs to give money that would also go toward CapEx.
Mhm.
Would think they would
Yeah.
account for it in this.
I think that is probably the CapEx, right?
What,
Because like there's no fixture and furniture here. They're gonna remove it
uh,
because they wanna change um yeah they wanna convert a hotel into a normal apartment now. Then it would be like, okay, remove all the furniture, right? And then put a kitchen in and put a bathroom in, right?
but I would
Like
still
I think
expect,
there's a bathroom already. Yeah.
I would expect a separate line item for CapEx and not mixing in with the FFE.
Yeah.
So
Yeah.
why that's
Yeah.
not on
Totally.
this list is
Yeah. Let's go more into this and
okay.
then see where do they put. Sometimes they put things somewhere that. Okay. So the assumption year one is a construction phase. Year 2 year rent increase is 3.5%. Expand increase is 2.5%. Year one rent below market rent. No distribution to GP or LP during the time of construction. And they're gonna refinance at 6.5% interest only. They're taking 2% as asset management fee and 4% property management fee. And they're gonna have the expand income ratio 27 to 30%. That's pretty low because I think they're gonna have to transition. Transition from when they transition, they still have to run the hotel a little bit, right? I think, and that's could be making the spend higher than 30% because they
So
spend.
I guess I didn't understand it because I maybe got late, but so they are going to retain it as a hotel until they convert everything over? Is that that's what their strategy is?
Yeah, so I saw that it's already 35% converted into multifamily.
Correct. And I don't know if I guess my question was, were they going to buy it outright? They've got 35% that they could lease up, and would they then leave the other ones vacant, or are they going to continue to operate those as a hotel and slowly transition?
They continue operate. They continue
Okay.
operate as a hotel. So that's why I'm saying that like the expand income ratio may be higher than this 30% because they need to have housekeeping and all of that.
Correct.
Also the assumption of rent increase, I would not assume that it's gonna increase 3.5% even. With right now, maybe just 2% and expand 2.5. Expense is increasing quite fast compared to income. But let's look at what they do in the year zero. So year zero, gross potential rent is around 1.9, loss to lease, gross schedule rent, physical vacancy, rental income, utility reimbursement, other income, tax, insurance, repair, maintenance. I don't see capex here. Equity contribution is 2.8.
I can't, yeah, they have repairs and maintenance, which wouldn't fall under CapEx.
No, no. So that was, I think that's what it was. So they gonna use this to rehab the property, I think.
Then it's mislabeled because that should not be labeled that for CapEx.
Exactly. So it's not FF&E at all. And here, because I see the equity contribution is not going higher, right? The total they raised from investor gonna just 2.8 million, or keeping it for, year 5, but year 1, yeah, this is the expand income ratio. Even year 2, they keep it 22%. That's too low. What do you think? You're on mute.
I agree, it is too low. I
Yeah.
think but it's a particular, I think certainly in the earlier years, it should be much higher. Again, when you figure in the CapEx and conversions and all that. And I also want to know what their plan is. How many do they plan to get converted each year? Which would shift the expenses, the ratio.
They plan to convert everything in year 1, and then refinance it right after.
That seems pretty bold. I mean, if only 35% are done and you're going to do it in year 1 and you still want it to operate, the remaining use to operate as a hotel.
Mm-hmm. So they do it at so there's they told me there's 3 floors. So the third floor already converted. The third floor already converted. So they gonna convert the second floor while leasing the third floor up, and then the first floor is still a hotel during that time. And then when the second floor finished construction, they lease the second floor up, and then the first floor they're gonna start converted.
So how much time do they expect to convert each floor? If it's within a year, that's a pretty
That's a bold
yeah,
that's a bold goal, right?
right.
I mean, it can be done. It can be done, but like, you really have to be laser focused and get everything. And then it's gonna be chaos. So
It's going to be chaos. And I mean, nowadays, can you guarantee a crew that can commit that time? There's all these moving parts. So yeah, I think it's bold to get it done in a year. I have my doubts. I have my doubts about the expenses they have forecasted. It doesn't account for everything, including the CapEx. Yeah.
so I mean, they own a construction company, right?
So
So
that's a
that's
benefit.
why that's the benefit that they own it for, I don't know, 12 years. So that's maybe the thing that make them like, oh, I got this. But let's see. So this is projected equity at sales. Exit cap rate is 5.5. Price is 33 million. And the cost to go all in is 15 million. This is like, this is a lot. So they return back to investor, disposition fee, everything, net equity. The net equity is almost 14 million. Investor cash flow 11 million for 5 years old, and equity share 7 million. This I don't understand. Investor cumulative return.
Or times your investments. I think the way deals have been lately, that's reaching in this economy. A 400+% return for investors.
Unheard of.
Yeah.
Let's see this. 36% cash flow return. Equity return is 2.7, like it's 2.75x multiple. Is that what they're saying?
Yeah, so when they sell it, that's what they
it's three.
expect.
Okay, so it's like 3.75x multiple here. Is that what they're saying?
No, it's 2 point, well, so over the 5 years, they'll return 36%. So after that, over 5 years, and when they go to sell it, there'll be another, the investors will get almost a 300% return additional
yeah.
beyond the cash flow they've gotten. So
Exactly.
a 320% return in this market. Yeah, I guess I'm not buying.
Okay, so projected profit
Okay.
breakdown
Yeah.
is
So if you put $100,000 in,
yeah, they're gonna
Yeah.
return to you
40
475. Oh no, $420,000.
you'll get the first of all, first projected cash flow. So over each year, you're going to get $9,000. So a total of $45,000 based on your quarterly distributions each. I mean, so you got $45,000, and then when they go sell it, in year 5, what that return? Okay, so now I read this. The 275,306. That includes the $45,000 you got over 5 years, the $100,000 you invested, and then an additional amount, 252 plus 275,306. Where the heck?
Because when they sell it, it's like they buy in for 15, selling for 33, right?
33. Yeah, it appears this. So you're gonna get,
That's quite a big chunk of projected return at the sales.
so year 5.
275. Yeah.
Yeah, year 5, they're expecting to 36 times for I'm trying to make these figures work. I don't. 145.
So they projected profit on sales or refined at year 1 when they finish. I think that when they finish, the goal is to refine or sell to cash you out first. Look, this is they're gonna cash you out first.
Right, they're
Right?
gonna. So you'll have no. Okay, well, if they're.
You have no equity in there. It's like your money in and then out with some money.
So
and
how
then
are they
just keep
returning
going.
$100,000 in year 5?
Because the property get I think at the beginning they were saying that the property right now get evaluated at 27 million or something
Right, but like you
when they
said,
are buying it for 12 or 15 million.
but they're talking here doing a cash out refinance, which basically is a return of your equity and then some. I mean, whatever you
Yeah.
put it in. That's what I typically think when I do a cash out refinance. I get what I invested, so I have no money in the deal anymore.
Yeah.
But they're giving you more than your investment, which was $100,000. But in year 5, then it shows that your capital is being returned.
Yeah, so they cash you out, but they still keep your equity. You still have the equities, you still own it.
right, but you don't, but you should have got your original investment back,
Yeah,
but it's saying in year 5 that your investment's being returned. So this is a
so there's
confusing.
I think, yeah, that's confusion. So there's like 2 times that your money got returned.
Yeah, are they just is this they're doing cash out refinance? It's just giving you a profit in year 1. It's not really they're not returning your capital in year 1. They're just giving you extra money based on the refinance. That's the best thing I can make out of this chart. They do a cash out refinance year 1. Hey, this is all the profit we're going to give you right off the bat. You're going to keep your capital, which that's not how I would typically see it happen. They do a
Yeah,
cash out refinance, give me my return, what I invested in, and then
it's
everything
too good to
else.
be true, right?
Yeah.
So this is just the profit. Basically, this is not your capital. It's just profit from refi.
And then you're going to have to pay capital gains on that money.
Yeah, like you got deduct first year, and then the second year you're gonna get money back, and 20 something K on gain. Well, I don't mind that if it's real, because I'm
Right.
gonna turn around and invest somewhere else, right? But
Correct. If and hopefully you're investing in a good market. I mean, it's 20 to 24. I have no idea. Everybody's saying wait till 2025, but and now they're predicting that Powell's going to lower the interest rates in September, but I've heard that story multiple
yeah,
times.
yeah. So what do you so how long have you been investing? I know like 2019 you start investing into apartments.
Yes, and I just this past month I got my first capital call, so I'm having to
You
go
did?
through that mess. Like, oh, geez.
Oh, sorry, you have
Yeah,
to
well, I
go through
mean,
all that.
it's the thing is, it's the property is not distressed. I know it's in Huntsville. It's good location. The banks are wanting more reserves,
Mm-hmm.
so it's
It's
but it's
making
one of
still cash flowing, or um they
basically
just want more money in reserve.
well, money in reserves also money to go. If they want money in reserves, so then we can draw to do capex on it. They've been doing a lot of turnover of units, replacing the roof and all that. So the banks are trying to be a little bit more careful with their investments. I'm just kind of walking on eggshells right now because we've got another property in Huntsville that it's a it's a new build. It's got certificate of occupancy, and so far so good. Got
Mm-hmm.
a lot of money invested in that property. So we had talked about doing a cash out refinance by the end of this year, early next year, but that could go anywhere.
Are you the GP on that deal?
No, I'm LP, so but I have a
Yeah,
lot of
okay.
conversations with interactions with the GPs on this. So there's
So
all these
you
moving parts. Go
so
ahead.
you mostly like just do LP so far,
Yes.
and you just focus on that, right?
Yeah. Well, I'm trying to roll into in the GP area. I actually one of my commitments this year because I left my position with my
Mm-hmm.
job in June, and my commitment was after that was over, I was going to commit more time to real estate than I have been.
Gotcha.
And
Yeah. So how long have you been in Braxton Brock?
uh it is I gotta remember this. It's not that
Oh,
long
yeah.
to say. I think we're coming up on our second year.
Oh, second year. Oh,
Yeah.
so you joined maybe 2023?
2022, October of 2022. And
Mm.
so
Oh,
then the market kind of went haywire. So we've been just continuing to educate ourselves, and the single families have been doing great, which a lot of people in the investment apartment multifamily say you need to get out of single families and throw it all in the multifamily. And frankly, the single family has been our means to do cash out refinances and invest it in the
Yeah,
multifamily other thing. So as long as it continues to move forward, we're going to keep that as kind of our bank. Do
right.
more work in this.
So yeah, so I met a lot of people using single family to subsidize the multifamily investment, because I think the reason people tell you to get out because of I think the active side of it. So you're more involved in it, I guess. Um, but for for the control, like you have control over it, right? And I don't know about, you're probably in New Mexico?
Yes, but our single families are kind of spread out. We had two here, but then we did a 1031 last year. And we have a property in Arkansas, one in Iowa, and one New Mexico. And had to manage a couple of property managers, had to change those out. Things are finally stable again.
Yeah.
But I told my wife, that's why we didn't get a single families when we got the capital call. We don't have control over everything. That at least we have a say of how to proceed with these properties. And so, how
Yeah.
about yourself?
So no capital call so far, so that's great. But we invested in maybe 6 deals so far. Um, and we're lucky because we start a little bit late. So 2023 March we joined Blossom Rock.
Okay.
But in 2022 we already start LPing, and then we realized that we don't know what we're doing. Uh, but it's kind of like a hurdle for you to, like, okay, give money to somebody else to operate and you have no control. But I think it's just a mindset leap to do that. And when we joined Blossom Rock, the market just tanked and the interest rate just high. Like a lot of weird things happen, like capital calls happen, and then the market went into distress around fall. So we start getting deals that, like, they buying distressed property. So we LP in those starting from 2023. So that's really our luck. Like, it's just timing. Nobody can tell. We could be like in 2021 and 2022 and just gonna get capital call right now, right? And yeah, and then until now, like, we keep investing in a few more deals. Even the market is not, I don't know, like, it's not very active and there's not a lot of deals moving, but the deals that are out there, I think, are distressed deal. So so that's so far, like, we're very short into this, like couple years, and I just try to learn more from other people.
Yes, and even some of the people that have been in the program for a long time have never experienced this type of market. So they're learning, and how do they manage it, and
Yeah.
how do you have those awkward conversations, especially with the capital call. We had a call last week, or
Yeah.
2 weeks ago, about the capital call, and it was a hard conversation, but it is what it is. And
Mhm.
we'll see what happens if the
And
bank.
do you gonna give the money for the capital call?
Yes, they're not. Yeah, there's upwards of they're asking upwards of 35% of our investment.
Oh, okay. So
but
not bad.
there's a range and all that, and so it's a reasonable amount. If I got multiple capital calls, then I have a whole different
Yeah.
situation
Yeah.
to deal with. And in these particular properties, it was during COVID that I got into them early on. So
Ah, okay.
21, 22. So we'll see. I'm looking forward to this new build, and hopefully that will pan out. I can't change. I only can change how I respond to it.
Mm. But you now like more focused on this since you like a month into not working full time, right?
Correct. With not working full time, I'm just doing some consulting work and giving me more time to get get deeper in education, underwriting, getting on, conversations like this.
Hmm.
And that was kind of my promise to my wife. It's like I was juggling too many balls with the job and all that. And so I'm excited. I'm excited about what lies ahead.
So what was your background?
An attorney.
Attorney.
Yeah.
Oh, okay, that's so cool. So now that you retire from that position, are you also like still running your law firm, or you're like um working for a company and you just stop?
I'm
You're done
working
with that?
for I'm doing some stuff working with a nonprofit right now, and there are some other opportunities that lay in waiting. Uh, but yeah, I'm not gonna, at least this year, I don't plan to open up my own law practice. There's other areas of law I would like to pursue, but for me, it's just a little breathing room, and the last few weeks I've been able to sleep in longer than I normally
Oh,
sleep
that's
in.
great.
So regeneration.
Regeneration. Regeneration seems like in Star Trek or something.
So are you going to be in Dallas in August for
Yeah,
the
so
meetup?
we live in Dallas. So I'm
Right,
living,
but for the mentoring August 10th, or is it?
yeah,
Yeah.
August 10. I'll be there in August
Okay.
10. You'll be there?
Yes.
Okay, yeah. We'll see each other then. Yeah, I always love the in-person training because that's what we pay for. Like we pay to join 200 other apartment owners, right? Like and meet them every 2 months. That's the whole reason why I joined Brassemra.
Yeah. Same here.
And I love stories. So I was on a bus tour and I sit next to this guy. I was like, "Oh, how long have you been in this? And have you been doing?" And then he was like, "Yeah, I'm in this for 10 years. Um, so far, I've been investing, still have my job. So I'm participating in the mastermind and not mastermind, but like personal mentoring every year. But I don't do GP thing. I just invest in LP." And I asked him like, how many LP deals have you been investing in? It's like 10 years. And then he's like, well, probably 75 deals. Currently have like maybe 30 something deals active. Um, Recently I have like 3 capital calls, but like 3 out of 75 is pretty good. And they come ask me for more money. They usually good operators, so I give them. And I was like, oh my God, like I don't want to be a GP anymore. I want to be like this guy. It's like he just sit there. So he's like, yeah. So he's a tech exec at AT&T. They live in Dallas as well. So it's like, oh, maybe when I retire, then I start doing GP stuff, but I'm not sure. So
I don't know if it's the same person. I talked to somebody that also had been in the program for many years, and he said they used to limited partners and general partners, there's a whole they used to do it differently back then. And but he was a lot of deals as well. And but he says he didn't know if he was ever going to go to a GP route because he's always had good experiences with LP.
Right, right. And yeah, and GPs also right now is hard, right? Like it's there's people that with deals that already have capital call, they they discouraged to go get another deal and might get into another hard conversation with investor. And they're busy rescuing the deals that they've been doing in the high peak of the market.
Yeah.
Yeah. So I think that's also leave opportunity for like new people like us coming in. And but the market I heard right now is it's not slow at all. Like the deal is absorbing because I think people start deploying money. So some friends that constantly like go put LOI out there, especially in the Dallas market, they
Mhm.
say that they get overrun by some, endowment and family offices, so they don't get the price they want.
And that we've had discussions here. It's like maybe we need to. I mean, very open to other markets. Of course, we've got another one in up in Greenville, uh,
Mhm.
LP we're in Texas. But looking in our own backyard, it for several years it was not a great market to be in, but there's a lot of changes, positive changes, businesses coming in here. Um, that I think we need to start looking closer at home where there is a little less competition than what we would get in Texas.
Right. And then do you get the crazy property tax there?
Our taxes are no, Texas has got the crazy property taxes.
I
We're
know,
pretty good. We're pretty good with that.
right? New Mexico is better. What about the crazy insurance?
Well, I mean, actually it's yeah, our insurance has went up like everybody else, but not like other parts of the country. So it's it's a pretty stable market and compared to other places. Even with the insurance projections on that the deal you were going over, I'm thinking that's what the insurance is this year. What's it going to be next year? Um, Even personal property tax. I mean, even personal insurance on our homes, like I got to raise the rent. I cannot cover
Yeah,
this insurance. And actually, that's one
yeah,
of the conversations our property managers are going to have with our tenant today. It's like we're going to propose a rent increase of X amount of dollars, and we'll see how the tenant responds.
right. Inflation not stopping, and but the insurance like interesting because I don't know, like Texas, I know there's a lot of hail, storm, um, but I don't see not a New Mexico on the news for weather like in Texas. So, but the price of the insurance still increase.
Yeah. I mean, weather-wise with us, our big thing this year, our big thing would be wildfires. We don't have any,
Wildfire.
yeah, we don't have anything. We'll have some hail events and all that, but nothing like other parts of the country. So we're kind of one of
Yeah,
the natural disasters kind of escape us in most respects.
that's great. That's awesome. I have a friend who's actually building a new build in New Mexico, like new multi-family.
Where is
Um,
this? Where in New Mexico?
I think it's in Albuquerque. It's like I think
Albuquerque?
near to you. Yeah, and then so her mentor, she used to be in Brassenbrock, but the LP program, and then she learned development from this guy called Jerome. Um, and then he also in New Mexico, so that's why they building it in New Mexico. It's like mentor, but also partner with you kind of thing. And then they gonna just develop it and refinance all the investor out and just hold it forever. That's the strategy that they doing. new build and holding on forever. Sounds good to me, but if the
Yeah,
number works, right? So
right.
yeah.
We're also getting our first, with single families, we're getting our first build to rent community. A number of homes are being built near,
Build to rent.
our local hospital,
Yeah.
so yeah.
Oh, that's so cool. Yeah, I would love to meet you in August 10 and talk more about what you have out there in New Mexico. I'm always curious. I've never been to New Mexico, and I heard there's a lot of beautiful place there.
Well, we always tell people if you want to get a fun taste of New Mexico, the first full week of October, we have our balloon fiesta. It's the second largest in the world, brings people from
Oh,
everywhere and kind of showcases some of the best sides of New Mexico.
that's awesome. Yeah, perfect. Yeah, uh, our call is almost end now. Thank you so much for joining, Bob. I really appreciate it. I do this every week, but I'm like very low tech, so sometimes like my Zoom call like have some setting that I don't even know. So that's why you ask for like, oh, ask me for a code. But I'm gonna get my husband set it up better, but since now he's free, he just got laid off from his job a few days ago. But it's good because then he can help me with all of this thing. Um, and looking forward to see you in August.
Okay, and are you meeting next week as well on the call?
Yeah, yeah,
Okay,
on the same call.
I will do my
Yeah.
best to be on that call as well.
Awesome. Yeah, usually we have like roughly 5, 6 people on the call. I think some people are gonna have the same issue that you have today, and that's why they couldn't join. And they didn't text me on Facebook. I just catch them or something. So it's my bad. Sorry about that. But I go live on Facebook, so people people see this and they join whenever they can. Yeah. Awesome. Great chatting, Bob.
Great chatting with you as well. Really enjoyed it.
Yeah.
All right,
Yeah. Good. Have a good day, okay?
you too. Bye.
Yeah, bye.